I think the more communication that one has with a prospective investor, the better. What
Yeah.
I don't think you want is just to meet someone once and add them to your distribution email list and then reach out to them whenever you have a deal. That's just not a best practice.
Yeah.
I think to the extent you can have conversations with people, meet up with them, get to know them better, that's only going to increase the likelihood that they are going to invest.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Are you ready to start investing in real estate today but don't know where to start? Sometimes investing can seem way too complicated, but it actually couldn't be any easier than with MNvest.com. You know the co-founder and my friend Nate Armstrong. He appeared on episode 20, and if you haven't heard it, go back and listen to it, episode number 20. MNvest is a company that allows you to invest in turnkey real estate. Their goal is to build powerful investment tools that make real estate investing accessible to everyone. They have contractors and property managers available for you with the click of your mouse. While other real estate agents can only offer a property, MNvest brings you a full turnkey package that allows you to diversify your investments, earn passive income, and start building equity in properties. Their simple, intuitive design allows newcomers and experienced investors alike to hit the ground running and to be able to choose the properties when they want and where they want. View easy to understand charts and data to allow you to buy in only a few clicks or just a simple phone call. With MNvest, you'll be building your portfolio as quickly or as slowly as you would like. And right now, MNvest is giving our listeners, Pillar of Wealth Creation listeners, a free course on how to finally win in real estate investing. So go to MNvest.com/pillars. That's MNvest.com/pillars to claim your free course today. Hello and welcome to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me is Zach Robbins. Zach, how are you doing today?
I'm doing pretty well, Todd. Yourself?
Fantastic. Well, thanks for being on the show. And Zach, why don't you give our listeners a little bit about your background and who you are?
Sure. I'm a securities attorney. I work at Messerly & Kramer in Minneapolis. My main sort of bread and butter is investment crowdfunding, trying to help companies raise capital online through the use of crowdfunding. And excited to be on the show and tell you more about myself and what's happening in this space, because it's pretty exciting right now.
So Zach, why did you get into the crowdfunding? Why did you choose the securities portion and kind of get attached to this crowdfunding?
Sure. So I had worked as an investment banker for about 5 years and had worked very closely with entrepreneurs trying to raise capital for their own companies. And I saw how difficult it was to only have the option of picking up the phone or sending out emails or trying to attend events to find investors. And that was because there were certain prohibitions on the use of general solicitation, which is basically advertising your need for capital. Meanwhile, every other industry had taken advantage of the internet. But if you wanted to raise capital for your company, you could not promote that fact on Facebook, LinkedIn, Twitter, etc. So seeing the success of Kickstarter was sort of the first, I think the light bulb went off in many folks' head that this same concept can be used for equity or debt within a company. Kickstarter launched in 2009. They've raised about $5 billion for different campaigns and projects since. Fortunately, in 2012, Congress passed something called the Jobs Act. And what the Jobs Act does was finally lift that ban to allow private companies to nationwide raise capital from both accredited and non-accredited investors. And I won't go through the definition right now, but approximately 3% of the population is accredited, and they've basically had a monopoly on investing in companies for the past 80 plus years. Meanwhile, the other 97% of the population, the non-accredited investors, have pretty much been foreclosed upon the opportunity to invest in private companies.
So, now because of this Jobs Act, I can just go out and tell everybody, I'm raising money and just tell the world, right?
If we're only that easy. So yeah, I mean, you're going to need counsel from folks like myself, a securities attorney who understands the nuances of both state and federal securities laws to ensure that you're keeping yourself out of trouble. And so the good news is, yes, we're finally now able to publicize the need for capital. The bad news is that it takes time and resources to put together compliant offerings to ensure that companies are staying on the right side of the law. Since May of 2016, there's been about $105 million raised through what's known as regulation crowdfunding, or Reg CF. That's been raised across approximately 440 or so companies. And those companies have all utilized what are known as funding portals. These funding portals have been registered and approved by FINRA and the SEC. And so what these portals are trying to do is now help automate the process such that it's easier for prospective sponsors of deals to now be able to go to a particular portal and fill in the information, and hopefully after some time and counsel, whip out a securities offering that is compliant with the law and that can be filed with the SEC. Once that's been done, then game on. There's certainly certain restrictions, as one would assume, on what can and cannot be said. But the good news is that once it's been filed, a company can begin to publicize their need for capital.
So Zach, I got a question for you, because I talk to a lot of real estate people that are syndicating, and a lot of them just want to use only accredited investors, and
Yep.
their reasons vary, but essentially it's easier. They feel like they have less threat of lawsuits and
Sure.
all that kind of stuff.
Sure.
Why should I consider using non-accredited investors? And the other thing I think is they think, well, non-accredited investors aren't going to be able to invest as much. So now it's going to be more of a pain, because instead of 100 investors, now I've got 300 or 500 investors. So give me some reasons why I might want to go with the crowd and use non-accredited as well.
Well, look, if your Rolodex consists of accredited investors, then sure, nine out of 10 times, if you can raise all of the capital from accredited investors, it's going to make the most sense to do so. To your point, one would rather have perhaps a dozen investors rather than 99. And so to the extent that that's possible for a sponsor to solely go after accredited investors, go ahead. The downside is that, once again, it's only 3% of the population. If you didn't, grow up on the right side of the tracks, go to the right schools, know the right types of people, you may have no opportunity to raise capital from an accredited investor. And so therefore the crowd may be your only option. Likewise, there are certain instances where the crowd will absolutely be a better option. Namely, if you're going to get better deal terms from the crowd than you would from accredited investors, or where there's perhaps a retail opportunity that you're trying to raise capital for, and it would behoove you to have 100 investors that are going to frequent that location and ensure that the business that is renting the space is going to succeed, versus having 3 or 4 investors who aren't going to spread the word and help that business succeed. So just to give an example, I've done a lot of capital raising for tap rooms. And one such deal that I'm thinking of, we had 60 investors participate. 45 of those 60 came in at the minimum of 5,000. The other 15 came in somewhere between 5,000 and 300,000. And there's a nice mix because they were able to fully finance the company, able to open up its doors. 3 or 4 investors put in about 50% of the capital, but the other 50% came from the crowd. And guess what? The crowd goes in there every single day, and then they tell their friends about it. And so having a vested interest in it ensures that it succeeds. So that's why the crowd in that case can be much more beneficial than having just a few accredited investors.
Yeah, that's a great point. I see that being really powerful, actually, on a business like that, where you got a brew house and you're trying to get people in, and that's going to immediately get a lot of people in your door. I mean, these people have ownership. They spent $5,000. Granted, they would like some profit back, but they feel like it's theirs. Which part of it is, and so they've got that vested interest in it, and they want to tell all their buddies about it, and so that could be very powerful. Cool. Is it a lot more difficult, or do we have technology that makes it more streamlined to deal with all these investors?
Very good question. And I would say at the onset of when investment crowdfunding first launched in October of 2013 with Rule 506C, which is solely to accredited investors, that the tools were pretty weak. But since October 2013, over the past 4.5 or so years, the tools have definitely strengthened, and to the benefit of prospective sponsors of deals. Now there are whole systems, which I call investor relations as a service, which allow the sponsors of the deals to communicate with their investors, provide dividends or distributions to their investors, be able to facilitate voting with their investors. And what I'd say is most importantly, and this is sort of the golden goose, if we can make it happen, is liquidity. Meaning that through these platforms, we're starting to see the opportunity to be able to then trade your interest in what previously would have been probably an illiquid investment opportunity. Now through the development of exchanges and through the tokenization of securities, we're now seeing these private LLC interests or private shares in real estate deals in particular be tradable.
That's really interesting. Yeah, because previously, I mean, if somebody wanted out, they're kind of at the mercy of either finding somebody that would want to buy their share, or maybe somebody in the ownership group would want to buy their share. But you're seeing maybe a transformation where they could list that, trade it more similar to a stock, maybe not quite as a stock, but more similar to a stock. Is that what I'm hearing?
Exactly. Yeah. So I always find it's best to use examples. So to use an example here, I have a client by the name of Silicon Prairie Portal and Exchange, and they are a Minnesota state and Iowa state and Wisconsin state investment crowdfunding portal. They're also a federally registered investment crowdfunding portal. But in their name is the word exchange, because their game plan is to be able to provide liquidity after the investments have been sold. And so right now they are in the early stages of trying to prepare an exchange. But right now there are many other companies that are further along with seeking SEC registration to become what's known as an alternative trading system, or an ATS. Just to name some of those companies, a company called Templum, a company called Open Finance, company called T0 are just three exchanges that are launching. And what they're doing is they're basically mirroring the business model for crypto exchanges that are selling Bitcoin and Litecoin and other coins, but doing that with securities. And so it's a pretty exciting time to be in this space. It's still in the first inning, but I think pretty soon we're going to start to see more and more companies that are technically private have their securities be tradable on an exchange like those that I just uh, like the three that I identified.
Wow, that's awesome. It's exciting. It's an exciting industry because crowdfunding is just it's so new right now, and I think there's a lot of changes that'll continue to happen and hopefully evolve, and um, hopefully the government allows these changes to happen. I think, at least in my mind, that's maybe the most threatening part of crowdfunding. Would you agree with that? Or is there any threats to crowdfunding kind of changing for a negative way or even going away?
You know, I don't think so. I think that um, I think the government could certainly do better to improve some of the laws, but at making that statement, we're pretty in the weeds with stating that, oh, we can increase this cap or we can loosen up this definition. But for the most part, I think the framework that's been set up and structured is effective, and and I don't see government or regulation as the bottleneck here. What I see as the bottleneck is simply adoption and education to investors. And I
Hmm.
say that because I'm still talking to people every day who are doing deals the old private way. And it blows my mind that they're not taking advantage of some of the new laws, which would simply allow one to be able to publicize their offering nationwide. So I think that by utilizing some of the um, federal funding portals that I mentioned, or some of the state funding portals, or even the Rule 506C portals that have been around since 2013, like Realty Mogul, Realty Shares, Beverly Shares, Patch of Land, etc. Those portals have focused almost exclusively on accredited investors. Nonetheless, I'd like to see more and more private companies and private sponsors take advantage of those options.
Yeah, still think it's a relatively small amount of companies that are taking advantage of it, I would say.
Yeah, according to some SEC data, it's less than 20% of the Form Ds that are filed are choosing to do a public option. And so I'd love to see that more like 50-50. I just think it makes a ton of sense to be able to do so. Just to dive into a bit more detail, I mentioned 506C and I mentioned some of those portals. Of course, that's to accredited investors only, but to have the liberty to be able to publicize your offering on some of those sites, or on your own portal if one wants to do so. The downside is that they have to verify that the investors are indeed accredited. And there are third parties that do that for nominal fees, even some parties that do it for free.
Hmm.
And so in my mind, the trade-off there, the cost benefit is just, it makes so much more sense to be able to file a 506C offering and publicize your deal to the entire country, as opposed to having to keep it private to only those people that you have a pre-existing relationship with.
Is there a big cost difference between like a 506C and, let's say a 506B where you can't advertise it?
No, I would say that the only cost difference with respect to 506B versus 506C, besides the cost that I had talked about with verification of investors, which is 50, 60, $70 per investor, and there's certainly going to be some costs to host it on whatever portal that you're seeking to raise capital on, so you're going to have to factor that in.
Hmm.
But from a pure design of the offering documents, there shouldn't be much change, assuming that the private deal in the 506B realm is following sort of the template that one would for a traditional PPM, a private placement memo, which is describing the deal with a summary of terms, putting together risk factors for the deal, putting together an operating agreement, subscription agreement, etc. Just if you're going to have those basic documents, it shouldn't be very different to design that offering, whether it's 506B or 506C.
Cool. I'm going to switch gears a little bit because I got a question that's burning in my mind that I want to talk to you about.
Yes, sir.
So I'm a brand new, maybe I've done some investments, but I've never done a syndication. I've never raised private money. I think I've got some relationships with people, or at least maybe in the back of my mind, I know some people. What should I just start going and talking to these people about? Can I just go and start saying, hey, say if I don't know you're not an attorney, and I meet you at a meetup or something, and I start talking to you about, hey, I'm going to start raising private money to do, real estate deals. I'm going to start doing syndications. And is that something I can just start kind of just talking about openly, or what's the first step if I'm going to consider syndicating or raising money for a deal?
Well, I would say that unfortunately, it's not a black and white issue, and so you're sort of in the gray zone with the example that you just gave. What I would say is, to the extent that you're going to meetups, cocktail parties, industry events, and you want to meet people and begin to sort of create a relationship with them to be able to go to them when you do have a deal, I don't see anything wrong with that whatsoever. Where one does cross the line, though, is when they have a specific deal and they are doing that, and you're going to a cocktail party and you're saying, hey, I'm trying to raise capital for XYZ LLC. Here are the terms. I want you to invest. That would not be acceptable under the current regime of laws, which basically say that one needs to have a substantial pre-existing relationship with an investor before they can accept their investment.
So, Zach, you said you have to have a pre-existing relationship. You said you have to have I think you said substantial pre-existing relationship. Does that mean like, hey, I met you for the first time, maybe we've talked, maybe now we talked again a couple weeks later? Is that what you mean? Or is it, hey, I've known you for 6 years and I know you really well? Somewhere maybe in between.
Yeah, I would say it's probably somewhere in between. The SEC has provided some helpful guidance on this issue within the past few years, and they've actually even allowed for what's known as like a 30-day cooling off period, where if I just meet you and I want you to invest, I should wait 30 days to get to know you and ask you some basic investor questions, et cetera. And so if you were to go on realtyshares.com, it's been some time since I've been on their site, but that's been their model, is they do 506B offerings the old way of a private placement, but they allow anyone to go on the website and set up this 30-day cooling off period where they input information into the website, and someone from Realty Shares can contact that person and they can sort of create a relationship. So the answer is that the definition has been broadened for the better over the past few years, which is good. Having said that, I would still push people to doing a what I would call an investment crowdfunding offering, because then we're not even debating whether or not someone has a substantial pre-existing relationship. So to me, that's why it's a no-brainer.
Well, yeah, that's a good point. Well, I'm going to go back. We're not doing a crowdfunding, but I met somebody. Let's say it's on an online forum, or maybe it's even a networking event, and then we have another phone call, and we talk about investing, and we talk about, my business and all that kind of stuff. And maybe we have an hour conversation. I send them some emails that, they go onto my website, that stuff. And then call it 30 or whatever, 60 days later, I've got an investment. And could I now send that opportunity to them? Would you consider that a good enough relationship, or is that kind of still in the gray area?
I mean, yeah, it's tough to say. I think the more communication that one has with a prospective investor, the better. What
Yeah.
I don't think you want is just to meet someone once and add them to your distribution email list and then reach out to them whenever you have a deal. That's just not a best practice.
Yeah.
I think to the extent you can have conversations with people, meet up with them, get to know them better, that's only going to increase the likelihood that they are going to invest. So that would be my suggestion to that person is, hey, don't just be in the business of trying to add emails to your
Yeah.
distribution list, be in the business of trying to create meaningful relationships with people.
Okay. Yeah, that makes sense. That makes sense. Or go crowdfunding, and then you don't have to worry as much about it, because even if you don't have that, even if you didn't have enough of a pre-existing relationship, you're fine,
Yeah,
as long
but
as it's done right, of
I
course.
would, of course, but I would still stress my point. Even if you do invest in crowdfunding, go and meet all of your investors, or if they're not in the
Yeah.
area, go and have a phone call with them.
Yeah.
I mean, once again, that's going to create that rapport, because guess what? As more and more people learn about investment crowdfunding, there's going to be more deals out there, and you're just going to be another sponsor trying to ship out deals. So I don't mean to sound corny or old fashioned, but trying to create those meaningful relationships with an investor, even if they came to you through an investment crowdfunding offering, you've never met them or have nothing else in common with them, pick up the phone, set up a Zoom like you and I are doing right now, or a FaceTime, and try to get to know them, because I think that'll increase the likelihood that the both of you can have a long-term relationship with each other.
Yeah, I think that's a fantastic point. And what you just said about the crowdfunding, and it actually, when you said that, I thought that's just like people that started, um, blogging right when blogging started, or podcasting right when podcasting started, or, you know, doing it, really anything right when it started. If you did it and you were consistent with it, you're way farther ahead than anybody right now that's doing it. And so the same thing I think is going to happen with crowdfunding. If you are doing the crowdfunding right now, consistently with all your offerings, when everybody starts doing it, you're going to still stand ahead of everybody.
That's right. And there's people way smarter than me who say that the word crowdfunding is going to disappear in the same way that the word e-commerce has disappeared. Meaning, you don't say, "Hey, go to the e-commerce website of Amazon or Lululemon or Athleta." You buy it online. And the same thing is going to happen with funding, meaning that in the next 5 or 10 years, you're not going to say, "Hey, this is an investment crowdfunding offering and go to this portal to invest." That's going to be the assumption that that's where you go to invest. So to your point, the more time and energy that people spend in this very nascent field to understand it and try to package their own deals, it's only going to help them long term. And especially once things start to pivot in the future, as they always do, having been in the field for some time, it's going to provide a huge advantage to those for when the market does change.
Yeah. Yeah. Good. I want to quickly kind of talk about some of the cool stuff you've done with MNvest,
Yeah.
and well, first of all, kudos to you for
Oh, thanks.
doing it. But talk about kind of what MNvest is, and or what
Yeah.
kind of what you've done through the state.
Yeah. So MNvest is a state investment crowdfunding law that I helped to draft, and it is one of about 35 state investment crowdfunding laws. And one might say, why would I ever want to do a state crowdfunding law when I can take advantage of the federal regulation crowdfunding law, which is across all 50 states? And the answer that I would give is, well, these state crowdfunding laws have been designed in a way such that they are superior in just about every single category except one, as compared to the federal crowdfunding law. And that one category, of course, is where the securities can be sold. With state crowdfunding, obviously they can only be sold in a certain state. With Reg CF, they can be sold across all 50 states. Now, having said that, I'd say 7 or 8 out of 10 of the offerings that I encounter really only need to be sold within a state's borders. Meaning, if I'm going to crowdfund to purchase the Walgreens down the street, triple net lease, I mean, sure, I can syndicate funding all across the globe, but that Walgreens is down the block, and so maybe to use an even better example, what if it's a local coffee shop or a restaurant or a bar? Why is someone in Wyoming or Colorado going to have any interest in buying the land underneath that bar, that restaurant, that tap room? But probably not. So why not leverage state investment crowdfunding, which, as I mentioned, is oftentimes easier to use. You only have to work with your state securities office, which they're going to be easier to reach out to when you have a question. You're likely going to be able to raise more capital for the company, raise more capital from non-accredited investors. The financial statement requirements are going to be easier. The ongoing reporting requirements are going to be easier. There's just many reasons as to why a state crowdfunding option is going to be better. And so that's why I'm a huge proponent of it. And we brainstormed the law in 2014. It passed in 2015. 2016, the state wrote regulations. It effectively went live January 1 of 2017. Since that point, there's been about 11 companies that have taken advantage of it in this state, raising a bit north of $1 million. Having said that, I expect our state law in particular to be used much more in the future, because we have begun to automate the offering documents, such that one doesn't necessarily need to pay me $10 or $15 or $20,000 to draft an entire securities offering for them. It's now more of a DIY by answering questions on an investment crowdfunding portal and having an attorney review it. You are radically decreasing the costs involved and accelerating the speed in which it can happen, which, as you know, Todd, in your world, speed is often one of the most important considerations. You may lose a deal if it's going to take you 90 days to crowdfund for it.
Yeah.
To the extent that you come across a deal tomorrow and you can get an LOI by the end of the week and then launch your offering on Monday, we're just about there. And that's going to increase the likelihood that you'll be able to close on the capital if you can meet that type of deadline.
Yeah, that's great. Because that's a big thing in acquisitions, multifamily acquisition. I mean, you can't wait 90, 120 days. You just can't do it. Opening a brewery or something like that, or even doing a real estate development, you can wait oftentimes, but an acquisition like what I do, you can't wait that long.
And I would say, though, the big elephant in the room still is debt funding, which, as you know, can be 50, 60, 70, 80% of the proceeds can come from a bank. And so I think that's still the missing piece. I think once we have really established investment crowdfunding portals that can create long-term relationships with banks to be able to syndicate these deals online and show the deals online to the banks.
Interesting.
We're starting to get to that point, but that's where this is all going to really come together.
Yeah. Oh, that makes a lot of sense. Cool. So Zach, we're going to wrap up here. I got one question I want to ask you. What's your kind of goals moving forward here?
Well, Todd, I'm a huge fan of you and the podcast, and Pockets and other folks in your world. And like you and everyone else, I'd like to be able to build my own portfolio of assets. And so, I'm really intrigued to learn from you and learn from some of your guests to try to figure out how, um, by leveraging investment crowdfunding, I can put these two pieces together. How can I maybe start to enter the real estate world or the fine art world, or frankly, any asset,
Yeah.
and to be able to crowdfund it to build my own portfolio? That's what excites me most, and not just for myself, but for anyone who's trying to enter a space, trying to diversify their investments. Um, this to me is the answer. By leveraging your social network online, one can begin to build their own assets, which, as you know, creates freedom and is an exciting opportunity for anyone.
Cool. Awesome. Well, one more question, two more
Yes.
questions. All right.
Okay.
Maybe I'll just keep on going. What's one of your, daily, or do you have any daily habits, to kind of keep, you being, driven and successful?
Um, yeah, I find that for myself, I need sort of passion and a kick in the ass. So I'm a big fan of podcasts. I follow a lot of accounts on Instagram, which may be considered somewhat cheesy, but those types of sort of inspirational accounts or inspirational podcasts, I think it's important. It's just tough to always sort of find that burning desire inside of yourself to get up every morning and try to dominate. So
Hmm.
I think trying to find that from other people is critical. It's important. You also learn from others, so that's that's a great habit, I think. Another maybe more questionable habit is I'm big into Twitter and to following, people much smarter than me and trying to sort of inject yourself into a community in Twitter. It doesn't have to be Twitter, it can be frankly any network, but that's the one that I found the most benefit from. LinkedIn would be second. To that it's a great way to meet people and to interact with them and learn from them. If you're just there on those networks just to sort of browse and you're a wallflower, I don't think you're going to have much benefit. But to the extent you begin to interject yourself into conversations, you ask questions, that for me has turned into many offline relationships with people in other states or across the globe that I would have never met otherwise.
Yeah, that's a good point. I've been a lot more active on like LinkedIn and Facebook and, some of these other sites and bigger pockets, and I've made a lot of relationships now through those sites, and it's because, as you said, you're purposeful about being there. You're not just there browsing. You could go there and you could just spend all your day as, the fly on the wall, browsing and looking and reading, and you're just wasting your time doing that. You might learn some stuff, but overall you're wasting your time doing that. But if you're actually, communicating, asking questions, answering, questions, you're going to create those relationships like you mentioned. So I think that is, fantastic as well. So technology, man, that's amazing. What it's done. It's opened up doors that, you never would have been able to have 30 years ago.
Indeed. Yep. Amen.
Well, cool, Zach. How can our listeners get in touch with you?
Sure. You can find me on Twitter. I'm at ZJ Robbins. That's ZJROBINS. You can find me on LinkedIn, linkedin.com/IN/ZJ Robbins. Those are probably the two best ways to find me. One can send me a direct message via Twitter or LinkedIn, and happy to have a chat. That's the best way to sort of reach out. And then to the extent you can jump on the phone is always a great way to try to chat with someone. It can be a
Yeah.
challenge just to have a conversation online via chat or whatnot. So those are the best ways to get in touch with me.
Awesome. Zach, I appreciate you being on the show and talking about crowdfunding and raising money, and it was a blast.
Thank you, Todd. Appreciate it.
Yeah, have a good day.
You too. Bye.
Hey, special thanks to Zach Robbins. Appreciate him coming on the show and sharing a bunch of valuable insight, especially nice coming from an attorney who deals with this stuff day in and day out, and somebody who, Zach, did the whole MNvest and was a critical key person in getting that pushed through the state so we can do in-state crowdfunding. And so great talking with him. A couple of things I took from what he said. First of all, there's just a ton of opportunity in crowdfunding and where it's going to be in the future. And along with the whole, he talked a little bit about the securities tokenization and what's going on there and the opportunities involved in it. So if you're at all interested in doing any crowdfunding or just learning about investing in crowdfunding, I would suggest doing your research. There's a lot of cities I know in the Twin Cities, we have some meetups that happen, and just going and check it out. It's an industry that I think is just going to continue to evolve and grow, and it's here to stay. So that's exciting. So a few things: utilize the opportunities with crowdfunding that are available and be on the forefront instead of being kind of back and waiting for everybody else to pass you by. If you're on the forefront, I think you're going to have a lot more success with it as it continues to evolve. The other thing Zach talked quite a bit about is getting these relationships. Just because you're doing crowdfunding doesn't mean you should be not talking with your investors, those who invested. They might not even know you when they first inquire about it, when they first maybe even sign saying they're going to invest, but you should be calling them, you should be talking with them, you should be emailing with them, chatting with them, however you can connect to make sure you build that relationship, because that's going to be critical as you move forward as well. So, and then the other thing, create those meaningful relationships, and that kind of goes along with what I just said, but create a meaningful relationship with them, not just quick and email or whatever, but continue to build that and grow those relationships. Because again, there's going to be good referral sources, and crowdfunding isn't just a magic bullet. It's not like you're just going to put your investment opportunity up on the internet and everybody's going to invest in it because of the power of the internet. You're still going to have to do marketing. You're still going to have to get out there and promote whatever you're trying to crowdfund. So it's not that we can just throw it up on the internet and expect it to happen. We have to actually go out there and really promote it, really market it. It's the same thing with anything. Anyways, that is it. So appreciate again, Zach, for coming on the show. I am Todd Dexheimer signing off. And by the way, appreciate everybody listening who's been listening, and go on to our Facebook page. You can comment to us on anything that you want us to talk about more in depth. Maybe you heard something today that Zach talked about that we should be really further exploring, or anything you hear on other episodes that you want to explore more, guests that you maybe want us to try to talk to and reach out to. That would be great. So if you have any feedback, and as well as if you haven't subscribed, share it out. It'd be great if everybody could share this with one person. That would be fantastic. And appreciate everybody listening. Signing off. Make every day a Saturday. Are you ready to start investing in real estate today but don't know where to start? Sometimes investing can seem way too complicated, but it actually couldn't be any easier than with HomeInvest.com. You know the co-founder and my friend Nate Armstrong. He appeared on episode 20, and if you haven't heard it, go back and listen to it, episode number 20. MNvest is a company that allows you to invest in turnkey real estate. Their goal is to build powerful investment tools that make real estate investing accessible to everyone. They have contractors and property managers available for you with the click of your mouse. While other real estate agents can only offer a property, MNvest brings you a full turnkey package that allows you to diversify your investments, earn passive income, and start building equity in properties. Their simple, intuitive design allows newcomers and experienced investors alike to hit the ground running and to be able to choose the properties when they want and where they want. View easy to understand charts and data to allow you to buy in only a few clicks or just a simple phone call. With MNvest, you'll be building your portfolio as quickly or as slowly as you would like. And right now, MNvest is giving our listeners, Pillar of Wealth Creation listeners, a free course on how to finally win in real estate investing. So go to homeinvest.com/pillars. That's homeinvest.com/pillars to claim your free course today.